Hey guys, so I just wanted to post some BTC analysis. So let's get started. So if you look at this post that I created on 14th of April, here I indicated that after the dump that we had on April 13th, we have these two scenarios looking at. So the first scenario was that we will start moving up until until halving. So the period was from 19th of April to 21st of April. We'll keep moving up, and then we will keep moving down until 27th. And then we will then from there we pivot again and then keep moving up. So this was a scenario one. Scenario two was that we just hover around the lows around 61 to 64k, and then we move up from the halving to 27th and then move down. So right now this particular scenario fits perfectly into what happened. So we moved up to around 67k region, and then since then we had a dip. Now I thought that we would hit 55 or 57k region by 27, so that we can start moving up aggressively after that. Clearly we haven't got to that point yet. We are hovering somewhere around this region. The dip was not that strong. So I mean, it's possible that for now, it is possible that the bottom that we saw here on April 13th down, that is the bottom. Until I see the evidence of further downside, I'll consider this as the bottom for now. So what evidence I am looking for when I say we go further down is, let's go down to the daily chart on normal scale. Okay. The first evidence is if we get a daily close below this, 62,537. So let's say we close below this on the daily time frame. It's very likely we at least go to 59k region just this week, or this week. And then if we close even below that, then I think we are due for pretty decent correction after that, because this particular week has held price action for a while. We have seen several dips that were bought into as soon as this peak was tapped. So here. In my previous video, I have explained that there is an order block here on micro time scales that is buying the dip every time. So some large institution might have entered over here. So it's not indicative of that they want to hold the price up. It could be indicative of that they want the price to hover in this region as long as it takes, so that they can sell their investment for some profit. Okay. It's possible they might have bought over here or over here, and then they bought again over here. Now they're holding the price in this region up, so that price can move up, like people like us, retail, they buy into some bullish divergences for forming over here, and then the price goes up, and then they sell here in this region again. So that's how large institutions do their selling. They cannot sell their positions because they have billions of dollars invested. If they sell immediately, the price will come down and they won't get the price they want to sell the Bitcoin for. So what they will do is they will cause the dip by selling here, and then they will buy here. The price goes up again, and then they will sell again, and then this will keep happening over and over again until all of their investment is sold off, and then we go down from there, and then they will not be holding this price anymore. So we go down further. We go down further to this region, probably, if they have entered over here, and then we hold over here, and then we will see. So this is what I see for now in terms of um, invalidation of the scenario where this is the bottom or not. Okay, to see whether we are going up from here, the first indication is we close above this particular high, 64,800. And then if we start closing above this high on daily time frame, that's the first indication. And the confirmation is we start closing above this high, 57,400. Start closing above this high, I think then it's pretty likely that we keep going higher. So if you look at this particular Elliott wave count that I posted earlier, if you go here, so I posted a smaller count here. It's like 1, 2, 3, 4, 5. That would have taken us to 70K. It did not. The fifth wave ended around 67,400, and we came down after that. But if you zoom out to larger time scale, like the 12-hour, so this is still in wave 1. This was wave 1, and this is still in wave 2. Then we can see a large wave 3 here. 69K region. Okay. So if we do that, that means we break this particular high and then hold above it. Then we correct back down here and wave 4, holding this level. And then we can go up to higher 70K region, like around 73 to 74K region after that. Okay, so this is what I'm looking for in terms of Elliott waves analysis. And there are other things as well. So let's go those things. So this is a Bitcoin chart on logarithmic scale. Sorry, not yet. Okay, this is a Bitcoin chart on logarithmic scale. And you can clearly see that we had a wedge over here that the price was trending in. Then we broke up. Okay. Now we have already held this wedge once. Price can come back down and then bounce off this particular top line again. And if it bounces up and doesn't close below this low, then I think we are good. We still have chance to go up. If it closes below this low, then I think we are due for testing the lower edge of the wedge. Most likely what we'll do is we will test the 59K low, do a small bounce, and then fall back down 55K. If we hold this low, that means even if we come back down and then close the daily above this particular low, I think we are good. So what I noticed about these rising wedge formations is, I mean, this appears in several assets over and over again, especially after the bottom, after like a deep correction has taken place and the macro bottom has formed. So this, I remember in our Discord and on Twitter, everywhere, this rising wedge was pretty famous. Everybody was showing this rising wedge like the Bitcoin is about to fall down. And I was saying that we are going to go up, because after a macro bottom like this, these rising wedges break upwards, not downwards. Now, what's interesting about these rising wedges is after they break upwards, they always come back to test either this trend line or the lower one. And in some cases, they come back even deeper. So I'll show those scenarios. So this is gold. And then a few years ago, we were looking at this wedge. So this is the macro bottom for gold over here in 2017. And then the price was moving up in a wedge. And then we were thinking that, yeah, it might break down again here. But it never happened. Price broke up. And this is a fib pull from bottom to top. And let's see what happened. First, price came down, tested this wedge over here, bounced up, tested the lower wedge, even bigger bounce. But ultimately, it came back to test the 382 level over here. So this is the 382 retracement. And after that, we found another macro bottom for gold, and then you know the history after that. This is for gold. This is Nasdaq. So I remember in our trading Discord a couple of years ago, everybody was looking at this wedge, and we were trying to short. I think we entered first short over here. We got a little bit of profit. Then this whole way we were trying to short, and everybody got wrecked. What happened? Nasdaq broke up after a macro bottom like this. This wedge formation always happens across assets, and then breaks up, and then what happened? We tested the top trend line, we tested the bottom trend line, but ultimately we came somewhere around 382. Let me see if this report is correct. Um, yeah, I think it's correct. Yeah. So this particular formation happens, and then we came to test somewhere around 382. So I think that's possible even for Bitcoin. So you can see possible that we bounce up from here, bounce up from here, then go to the top of this region somewhere around here, and then dive deeper. Okay. And when that's going to happen, I'm not talking about that right now. It might take months to come back over here. But that's a real possibility that Bitcoin comes back down to 40K region in long run. And then it starts off another major bull run towards 150 or 200K, whatever targets people are thinking about. So yeah, so that's what I'm looking at. I think people in our Discord are already talking about hitting 55K. I think that's reasonable for now because we have not done any kind of, we have not reached any kind of confirmation for breaking either to the upside or to the downside. So both the scenarios are valid. So if we hit 55K, I think it's pretty likely that we're going to see a decent bounce from there. Now let's talk about how to capitalize on these opportunities. Okay. Let me open the Bitcoin dominance chart because I think the value for now, especially for the next few months, is in investing in altcoins. Why? Because of Bitcoin dominance. So this is Bitcoin dominance chart. Let me say the scale is correct. Yeah. This is Bitcoin dominance chart. Let me open, zoom out, larger time frames. So you see, this is, this is a region of interest for me. Bitcoin just slightly front ran this region over here without tapping this particular red box. It's possible it can come back up again. But what I'm watching is that it taps this region over here, the red box, and then falls back. Then it breaks this trend line that it has been for a long time. Okay. If it breaks this trend line, let's say it does not go to the red box right away, breaks this trend line, possible that it can bounce up from this 50% level, from this previous high to the low. So it's possible it can go back up again, taps this trend line, and then down. Okay. So if it loses this 50% trend line, it's a very good confirmation that altcoin season is in. We're going to see massive gains in alts. Okay. But what we have to think about is which altcoins are going to perform better. Because most of you would have seen that previous newer altcoins are performing way better than the ones from the previous era, from previous bull run. Okay. So how do we identify that which altcoins are going to perform better? So we have to compare their performance. What I do is basically compare their performance against Bitcoin. So let's open my favorite altcoin from previous bull run, at least ADA BTC chart. Okay, let's open that. Let's switch this scale to, okay. So this is zoom further, which time frame? Okay. So how do I gauge whether this altcoin is going to be performing better than Bitcoin? So I look at the divergence that it is forming on a weekly time frame. So this is ADA BTC chart, means whether ADA is performing better than Bitcoin. That's what is projected over here. Right now, you can see it's not performing better, going down. So if you would have invested in Bitcoin in this period, you would have profited more compared to investing in Cardano. But what we're seeing here is we're seeing a bullish divergence on a weekly time frame form over here. So we had like 1, 2, 3 drives of bullish divergence from these lows. And what we want to see is Cardano hold this bullish. Right now, it's not confirmed. I mean, what I want to see is Cardano comes up strongly after this. Whenever we see Bitcoin dominance fall, I want to see Cardano coming up strong from here. And then that will be the confirmation that the bull run for Cardano is starting. If we take into account that Bitcoin dominance is at its resistance right now. Okay, so let's open another chart of the competitor of Cardano is Solana. Okay. So here we see another interesting thing. So Solana is already performing better than Bitcoin. Okay. Solana is already performing better than Bitcoin. If you had invested in Bitcoin and you would have invested in Solana, Solana would have given you much better returns compared to Bitcoin. So you see the chart for Solana is in uptrend compared to the Cardano. Now what we see here is we see hidden bullish divergence. On Cardano chart, we saw regular bullish divergence. Here we see hidden bullish divergence. Now some of you may not know what the difference between these two is. So hidden bullish divergence basically is whenever we see hidden bullish divergence, we see the price making higher highs when the oscillator is making lower lows. So it's basically a confirmation of the continuation of the trend. We're not talking about catching the bottom here, we're talking about getting a confirmation whether the trend is going to continue up. So hidden bullish divergence basically tells you that. And in regular bullish divergence, we try to catch the bottom and the reversals. So whenever we see regular bullish divergence, price will be making lower low and the oscillator would be making high highs. We try to catch the bottom there. It would be the price would be in a downtrend, but we try to figure out where it will start moving up using the regular bullish divergence. So for Solana, it's hidden bullish divergence. So I think Solana is also a good choice to invest compared to Bitcoin. So let's check another one, AVAX BTC. Yeah, so here, let's see what do we have. Do we see any kind of divergence here? Nope, there is no divergence at all. So I think it would be better off not investing in this coin compared to Bitcoin. So I just showed you 3 examples of how to check which coin will be or is likely to perform better than Bitcoin. So like this, you can check your favorite altcoin. I mean, I don't think for all the newer altcoins, there will be a comparison pair like UXBTC. But for most of the altcoins which have been there for at least a couple of years, you will see a pair compared to BTC over there on TradingView. So you can use this kind of analysis to figure out where you should invest your money when the altcoin season is about to start. Okay, so that's all I wanted to cover. And then if you guys have any questions, you can catch up in Discord. Let me recheck here if there is anything else. Yeah, that's all. So I'll see you guys in Discord.